There's a quiet revolution happening in the background of everyday life, one that most people haven't fully noticed yet. Money, as we know it, is being redefined. It's no longer just physical bills or even bank balances. Governments around the world are rolling out something called central bank digital currencies, or CBDCs. And they're not just theoretical anymore, they're being tested, launched, and slowly integrated into our financial systems. But what does that mean for everyday people? And how does this tie into things like universal basic income, or even the rise of artificial intelligence? In this episode, we'll break down what CBDCs really are, where they're already being used, how they connect to universal basic income, the pros and cons of this system, the difference between centralized currencies like CBDCs and decentralized ones like Bitcoin, and how all of this fits into the future of work, payments, and personal freedom. 1. What are CBDCs? CBDCs, central bank digital currencies, are a government-issued digital version of your country's currency. If you live in the US, that would be a digital dollar. If you're in the EU, it's the digital euro. And so on. But let's be clear, CBDCs are not cryptocurrencies. They may use some of the same underlying blockchain technology, but they are centralized. That means they're completely controlled by a central authority, usually a country's central bank. Every transaction can be tracked, reversed, limited, or even restricted by law or government policy. CBDCs are programmable. That means the government could, in theory, set rules on how and when your money can be spent. It could expire. It could be blocked from being used for certain purchases. Or it could be automatically taxed at the moment you receive it. 2. Where are CBDCs already active? CBDCs aren't just a futuristic concept, they're already being tested or implemented in dozens of countries around the world. China has been leading the way. The digital yuan pilot began in 2020 and has now expanded to over 260 million wallets, with billions in transactions processed. The European Union is planning a digital euro. After 2 years of investigation, it entered a preparation phase in 2024. Full-scale trials and rollout are expected in fall 2025. Nigeria launched the e-Naira in 2021, becoming the first African country to go live with a CBDC. The Bahamas launched the Sand Dollar, the first fully deployed CBDC in the world. India, Russia, Brazil, Japan, and Canada are all running trials or building infrastructure for their own versions. The United States is researching a digital dollar through the Federal Reserve's Project Hamilton, though no official launch date has been set yet. 3. Why are governments doing this? The reasons are strategic. Decline of cash use, people are moving toward digital payments, and governments want to keep up. Competing with cryptocurrency, if people move to Bitcoin or stablecoins, governments lose control over their economies. Faster, cheaper transactions, CBDCs allow real-time settlement with lower transaction costs. Control and security, CBDCs let governments track illicit money flows, reduce tax evasion, and deliver stimulus aid more precisely. 4. How CBDCs connect to UBI. Universal Basic Income (UBI) is the idea that governments provide all citizens with a regular, guaranteed income, no strings attached. During the pandemic, we saw something similar with emergency stimulus checks. But with CBDCs, UBI could be taken to the next level. Here's how it might work. The government deposits money directly into your digital wallet. You receive payments monthly or weekly. That income is traceable, programmable, and possibly restricted based on policy. Some UBI pilots have already used digital wallets for payouts. Spain launched a basic income program during COVID, targeting over 850,000 families. South Korea ran local UBI-style payouts via digital apps. California and cities like Oakland and Stockton have tested guaranteed income programs. CBDCs would make this easier, faster, and more scalable, but also more controllable. 5. Pros of CBDCs and UBI. Speed. Governments could send aid instantly in a crisis. Inclusion. People without bank accounts could access digital money. Accountability. Fraud, waste, and tax evasion could be reduced. Efficiency. No checks, no middlemen, and no banks needed for simple transactions. Crisis response. In the age of pandemics or AI-displaced jobs, UBI could offer a safety net. 6. The cons and risks. Loss of privacy. Every transaction is logged and traceable. Control over spending. Governments could restrict how or where money is used. Financial censorship. Money could be frozen or revoked due to political or social reasons. Expiration. Some CBDC trials include money that disappears if not used within a time frame. Surveillance economy. Tied to digital ID, your money, health, and behavior could be interconnected. 7. Centralized versus decentralized, CBDCs versus Bitcoin. The key difference lies in control. CBDCs are centralized. The government or central bank has total authority over issuance, supply, and rules of use. Bitcoin is decentralized. It's run by a network of independent computers worldwide, with no single owner, no government control, and a limited, fixed supply, 21 million max. While CBDCs are built for efficiency and compliance, Bitcoin is built for freedom and decentralization. Some people see CBDCs as a Trojan horse for state control, while others see Bitcoin as too volatile and unregulated to serve as a mainstream currency. 8. How this connects to AI and the future economy. As AI continues to replace workers and automate industries, governments are looking for ways to prevent social collapse. CBDCs paired with UBI could offer a solution. Use AI to track economic health and deliver personalized income. Automate fraud detection and program compliance rules. Reduce the cost of running welfare programs. But this also means increased surveillance and reliance on centralized systems. Imagine this. You lose your job to AI. The government sends you UBI each month through your digital wallet. But you can only spend it on approved services. You can't save it. You can't buy certain things. And if you post something controversial online, your access could be paused. That's one possible future. But another is more optimistic. You use free tools like ChatGPT, CapCut, MoffAI, or Canva to create new income streams. You build a personal brand, start a small AI-powered business, or learn a skill that can't be automated. And the same digital systems that could restrict you can also empower you, if you know how to use them. 9. What you can do now. Stay informed. Look into your country's CBDC plans. Most central banks publish roadmaps. Learn about digital wallets, these will be key to accessing future payments. Diversify your income, explore side hustles and remote work options. Understand Bitcoin and crypto, even if you don't invest, learn how they work. Support financial privacy. Cash use and decentralized options help preserve freedom. CBDCs are no longer just an idea. They're being launched, tested, and normalized. UBI may not be far behind. And as AI transforms how we work and live, these systems will play a bigger role in our lives than we might expect. The future of money isn't coming, it's already here. The question is, will it liberate people or limit them? That depends on how we build it and how we use it. Thanks for watching Fireside ChatGPT. Remember, AI is a tool, not a truth. Always do your own research. Tagline: stay curious. Stay sharp. And stay human.